Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we're looking at a finished three-wave corrective structure and now continuation to the upside. In this scenario, wave W is a zigzag structure, wave X a zigzag family corrective structure, and wave Y a triangle. After wave Y, we then look for a multi 1-2, wave 1-2, 1-2, and then a wave 3 towards the upside. The invalidation for this scenario is price taking out the low at 91k, and if price continues towards the upside, we also want to see volume move to the upside as we are looking for a wave 3. So wave 1, 2, 1, 2, and then a wave 3, 4, 5, 4, 5. And in an impulse, it is by far most common to have the most amount of volume in your wave 3. The bearish scenario is a flat structure. You can see here on my chart A, B, and C. Three-wave structure in A, three-wave structure in B, and a five-wave C. After wave C, you then look for a continuation of the trend. The target for a wave C is below wave A, and the target for a wave B here is on the chart. The most common flat structure is an expanding flat, and the target for a wave B in an expanding flat is the blue box here, the 1.236 to the 1.38 Fibonacci taken from the start to the end of A, giving you a target between 96k and 95.1k. This orange box here is the common target for a regular flat, and a regular flat is less common than an expanding flat. Now this target is the 105 to the 0.9, 93.8k to 92.8k, and that is where we are at the moment. Now wave C, as mentioned, has to be an impulse to the downside, 1, 2, 3, 4, 5, which means that a Fibonacci that is interesting to keep an eye on is the 886, because the moment the 886 here is touched, it significantly reduces the probabilities for this to be a wave 2, and therefore it increases the probabilities for price to take out this high, 93.8k. In general, the probabilities for a flat structure will only really increase if price can start moving towards the downside, taking some of the lows, and especially this low here at 91k, as that is the hard invalidation for the bullish scenario. If we take a look at the CVD divergences, then the only CVD divergences that are interesting are the divergences made on the right side of the most recent high on the chart. You can see that price moved down, bounced to the upside, found a retracement with a bullish CVD. Price moved to the upside, took out this high, and the bullish CVDs played out. Of course, in a bullish trend, bullish CVDs are always interesting, and at the moment here locally on a 50-minute time frame, there are no CVD divergences. One really needs to wait for a range to form to then observe potential new CVD divergences. You can also actually here on the chart see the final little bit of resistance on the chart, which is this green order block here where we are at the moment. If we then look at the probabilities of the different scenarios, then in general we are looking for price to continue the trend. In both cases, the bullish scenario, the multi 1-2, as well as the flat scenario ABC, you are then looking for a continuation of the trend. The flat probabilities, however, that you see on the chart here will only significantly increase if price can take out this low here at 91k. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.